Hello everybody, Benga Latunji here. If you have ever asked questions as to who is that, when is that, how did that happen, I could tell you that you have interest in auditing. And everyone, one way or the other, has actually asked such a question or give answer to such a question at different times in life. So we want to actually revise auditing, be it advanced auditing, be it on the professional level, be it on the skill level, be it that you just have interest in audit, because the truth of the matter is everybody audits at one level or at one point in life or the other. Though we are talking about auditing now as a course, as a subject, but if you're a lover of auditing and you want to know what is going on around your business, around your environment, then this video is for you. Those that are writing examinations, advanced audits, or at the skill level, this is a revision class also for you. And key terms, many times when people are answering audit questions, a lot of people fails because key terminologies were not nailed. We need to nail it to show the examiner that we actually understand. So we are welcoming you to GGEMS Associate channel. We are going to do it from A to Z. This video is going to be explanatory video from A to Z. I'm not too sure we can finish A to Z of key terminologies of audit because it's so broad, but to a greater extent that we can, if I perceive that this video may be that long, we may need to ask and start another video or another episode and turn it into a series. But so far we are going to start and see how far we can go. First of all, let's start by saying what is an emphasis of matter, and I'm going to be snapshotting it. And please, if you are yet to subscribe, please subscribe to GGEMS Associate channel and click all as notification so that anytime we upload new video you can always receive the alert. And if you have any question as we continue now or any previous video, please, the email is there, you can reach out to us. So emphasis of matter, when we are talking about emphasis of matter, what do we mean? An auditor actually will put an emphasis of matter out on the audit reports when, let me quickly write emphasis of matter. That is what we are dealing with now. An auditor puts out emphasis of matter on his reports when we observe that there is a particular event or there is one thing or the other that we believe that the user of information should know about. So an emphasis of matter is to call the attention of user of information to that particular thing, the event in the course of that audit assignment. So that is an emphasis of matter. It's a paragraph that compel or shows the user of information or calls their attention to a particular event that auditors in their judgment believe is actually important for them to know. So we'll say that that is an emphasis of matter. So what about joint audit? Joint audit. When we're talking about a joint audit, what do we really mean? When we're talking about joint audit, we are talking about a situation or an audit procedure in which more than one auditor is involved in execution of that audit. So we cannot be talking about joint audits when a singular audit firm is engaged. So when we are talking about joint audit, it simply shows and indicates that at least two or more audit firms are engaged on that assignment, and you know what, they are jointly liable to the opinion they are giving out to the public as regards that audit. So we say they are jointly liable. So it's important for joint auditor to manage the execution very well, because other firms will not be exonerated from the consequence of their audit opinion that they've expressed, whether or not they were involved in that particular aspect of the audit process. Audit as a process. So, is segmented because they are jointly auditing it. An audit firm can take, let's say, part A, and joint auditor B takes part B of the audit assignment. They come together to express a singular opinion. Now, let's say auditor that take part A of the assignment, is what I'm saying now is will be liable as though they are actually the one that takes part A and part B joined together. They can't come out to the public and be telling us that no, it's only part A. This where the issue comes from. We do not know anything about it. There's nothing like that in joint audits. They are both jointly accountable for it. So that is about joint audit. Let us look at what management expert is. Who is a management expert? When we're talking about management experts, we are talking about, I think first of all we should say, who is an expert? An expert is a professional in his or her own right who has been licensed or certificated by a body of knowledge to carry out one thing or the other in this our business world or our environment. So an expert could be an actuarian, could be a surveyor, an expert could be a firefighter and the like. Okay, so now when we are talking about management experts, we are talking about an expert that management engaged. And just as we have management experts, we can equally have auditors experts. So please, for the purposes of examinations, know that an expert is what a person that has been licensed and authorized to do one thing or the other. Then who engages who is what would let us know whether an expert is a management expert or an auditor's expert. Please don't forget this. So therefore, a management expert is engaged by the management of an organization, just like the auditor's expert is engaged primarily by the auditor to carry out one aspect of the audit process or the other. So that is a management expert. Let us talk about a prospectus. A prospectus. We often heard about prospectus, especially when it involves sales or acquisition of an organization, when an organization is exchanging hands. And not quite long, we did a video on Nigeria Stock Exchange, Security Exchange Commission and the like. So a prospectus comes in this regards, and a prospectus actually is a financial statement too, but for a particular purpose. So it has information like a memorandum offering the share of an organization or the debenture or whatever they want to sell to the public for subscription or for sales. So that is a prospectus. A prospectus is a financial statement that is purposefully written for the purpose of buying or selling of shares, debenture, or any form of security of an organization. Let us move on to some of the other definition. What is an APM? An APM actually simply means Audit Planning Memorandum. Audit Planning Memorandum. And Audit Planning Memorandum is important for the planning and successful execution of audit. Audit planning memorandum is a tool of communication. Just as we have external tool of communication like auditors report to the public, an audit planning memorandum is an internal medium of communication to the auditors. So an APM is used to communicate about our knowledge and planning that we've undertaken in execution of an audit process or an audit engagement and assignment. An audit, we usually have a team members which we go out or be responsible for a particular audit. So the way they communicate to one another is using an APM. So an audit planning memorandum communicates to the team of auditors what we know about the client that is going to be audited, how we are going to audit them, the deadlines. Now I'm beginning to mention some of the things that must be in an APM. The deadline that we've agreed for the audit to be executed, the date of submission, the date of signing. It equally communicates those who are going to be member of the team, like the engagement partner, the audit manager, the audit supervisor, the audit trainees that are going to be part of the team for the audit execution. So an audit planning memorandum must be written and documented at the planning stage of an audit. And also at the execution is important, we refer to an APM, and even at the closure we need to refer to an APM too, because we need to go back to an APM to know whether everything has been executed and we actually find and we've actually met the requirements as planned and executed. So we can use an APM to control our audit work after we've executed it. Okay, let us move on to another one. Let's talk about an audit evidence. Audit evidence. Audit evidence. What is an audit evidence? Are you trying to answer it? That's great. Please, you can put it in the comment below. An audit evidence basically is, should I say anything? Information gathered in the course of an audit for the purpose of expression of an independent opinion will stand as an audit evidence. So now audit evidence can be in soft copy and can be in hard copy. Audit evidence can be in soft copy and can be in hard copy. It's still an audit evidence. Of course, there are qualities that audit evidence must have. Like it must be time bound, and audit evidence must be sufficient, must be appropriate for it to stand as audit evidence, must be able to stand the test of time. It must be authenticated. So all information used and gathered by the auditor in arriving at their opinion and conclusion and making an audit opinion is what? An audit evidence. So what is an audit expectation gap? Audit expectation gap. When we're talking about audit expectation gap, we are talking about the knowledge gap between the thing that auditor believes that he or she should execute in his assignment and what the audit clients expected of him or her or of the firm of chartered accountants. So an audit expectation gap is the lacuna between what we auditor are guided, auditors are guided to do by audit framework, international financial reporting standard, international auditing standard, and so many other frameworks. And what our audit clients thought we should deliver. And primarily, audit expectation gap we arise as a result of knowledge gap. Therefore, one of the reason or one of the things to do to close expectation gap too is to educate our clients about the deliverables of our audit assignment. And we just spoke about audit planning memorandum. We must communicate to our clients as we are engaging them. Let them know what audit is, what auditors will be done, we should not expect from the auditor. Like, let me give you an example of what could be an expectation gap. Almost all clients expect fraud to be detected. But you will agree with me, as much as fraud is not good and will bring any organization down, it is not the primary purpose of an audit assignment. The primary purpose of an audit assignment is to express an opinion as to the truthfulness and the fair presentation of the financial statement. End of quote. That does not exonerate an auditor from detecting fraud, but it is secondary. But to an audit client, they could make it a primary assignment. So if fraud is not eventually detected, it's assumed that the auditor has not done their work. So this is a major expectation gap and could only find a closure when we communicate to them, even from the onset, the purpose of an audit and what the management is responsible for. Management actually is responsible for the closure of expectation gap as regards fraud. Management should put strong internal control measure in place that can easily detect and debar fraud from happening. Of course, auditor too, in the course of our work, propose some internal control processes that could help our clients to achieve this. But we should try as much as possible not to major on minor or minor on major. Okay, let's move on to another thing that we can talk about when we are talking about definition of key terms of audits. Let's talk about continuous audit. Continuous audit. What is a continuous audit? When we're talking about continuous audit, it's actually a type of audit that is rolling. And you know what now? With the advent of technology, audit now is more or less continuous.